Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, March 11th, 2020. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. As the horror in Ukraine continues to drag on, S&P 500 finished the week on a sour note. NASDAQ and small caps and possibly Dow Jones is already in a bear market. High yield debt also hit new low. This is bad for stocks. I'll explain why. We'll look at market breadth again, and it deteriorates even further. So we're looking at potential downside target for S&P of 3,500. We'll look at Treasury bonds. They also hit a new low despite all the fear. Oil is likely to take a break, I think, and possibly will trade sideways, possibly even down. And we'll look at just a blockbuster trade we did for Chevron, so stay tuned for that. Dollar and gold normally move opposite to one another, but in this case they're actually moving up together, and we'll take a look at that. And Bitcoin is approaching quite a critical level and could collapse. If you're a subscriber, then stay tuned for a separate video. We'll cover all of the stocks. You can see we have quite a bit of gold related stocks. We're trading them. In fact, lots of gold related stocks. So yes, stay tuned for that if you're a subscriber. If you're not a subscriber, consider signing up by going to MasterChartsTrading.com. Click on products, sign up for one of the products, specifically trading indicators, or the newsletter, or the ultimate bundle, which combines both of them. Okay, so number one, how do I trade? So on this chart we see 4 lines: green, blue. I made it purple, but I usually make it red. You can change it, I made it purple just for make it more obvious, and the yellow line. So when the stock is above the blue line, when it closes above the blue line, we buy it. And notice this is a daily chart. What does a daily mean? Daily means a time period. So anything on daily or lower, 12 hours, 4 hours, whatever, we keep our setting as 250. Okay, if we go to weekly, so for example, this chart right here is weekly. In other words, each of the candlesticks, this is called a candlestick, so a green or red line bar here, 1 week worth of activity, make it 52. If we want to do monthly, if you're a super long-term investor and you want to just trade on monthly shares, so you trade once a month, make it length of 12. Okay, so again, if you want to trade, for example, I don't know, on 1 minute chart, you can do it. So for example, this is S&P 500 futures today, as traded on 1 minute chart, and you can clearly see excellent opportunities to sell short right there. So we had an opportunity right there. We also had an opportunity right there, you see. So nice big gains here and here as well. You can do it on any chart, but if you're trading continuous instruments, if you want to trade on smaller than daily, then make sure it's a continuous instrument. So for example, if you want to trade on 4-minute chart and you want to trade S&P 500 ETF SPY, don't do that. See, because there is a gap, and this will screw up the indicators. You don't want to do that. You want to look for continuous instruments if you're trading intraday. But for our purposes, we're gonna just look at daily chart, because we're humans. It's much easier to trade on daily charts. In other words, we're looking at once a day. We're gonna look at the chart and make a decision. So today, this is kind of bad looking candlestick. So I'll explain why is it a bad looking candlestick. Today's candlestick. So it has a red body, so selling dominated. So open is above the close. We had a big run up. You can see this tail out of the top, or shadow out of the top. but it got sold. So throughout the day, the bulls came in and said, we want to make the prices higher, but then the bears came in and said, no way. Not only they succeeded in overruling the bulls, they also closed it below the open. Additionally, you can see that we're right now closed below this. Well, it's purple, but I usually call it red line. But I wanted to make it obvious today, because notice that we closed at 41.96, but the line is at 42.05. More importantly, if we look on the daily chart, or sorry, on the weekly chart, this is the first time that we have closed below this purple or red support resistance line on a weekly basis in a very long time. So the last time this happened was in April of 2020. This is significant selling, big deal. Okay, so we're on weekly charts. This is each candlestick is a week's worth of activity. We have closed below this, purple or red support resistance line. You can, I make it purple, so normally it's red. Okay, so not a good sign once again. And we're gonna, take it one day at a time. So as of today, S&P 500 is in what's called a caution. So we're in caution phase. But other indices, for example, here's Dow Jones. So Dow Jones actually closed below this yellow line. And this is bear market. We can look on weekly chart as well. But on weekly chart, we haven't yet closed below the yellow line. We're kind of like right at it. We landed right at it. So on daily, yes, we have actually closed there twice. But on weekly, we're right above it. So caution, definitely almost avoid. In other words, almost bear market. Looking at NASDAQ also, NASDAQ, we have basically entered the bear market as well. You can see that we have closed below this yellow support resistance line. So again, you can look on the weekly chart, and here it's more obvious. So this is bear market. In other words, what's going on is we have broken below the level where bears, people think that we're now in a downtrend. So for me, as a trader, not an investor, a trader, I'm thinking, okay, so we have now changed our direction. We are no longer going up, we're going down. However, you can see that markets don't move in a straight line. So it's possible that Monday will just gap down and collapse. It is also quite likely that we at least might bounce a little bit. And most likely we will bounce towards this red line. So something like this might happen. It's quite likely. So we're looking at a bounce for Dow Jones for NASDAQ to like 13947 for Dow Jones. Difficult to say, but I guess maybe 33901. That's a nice level to watch if we bounce towards that level. But what I'm trying to say is that I'm thinking of selling. So if we do get that bounce, I would sell it short there. Russell, looking at weekly chart, same thing. So we are already in a bear market. Russell 2000 small caps entered bear market in January, 18th of January, right there. So yeah, it's also possible we might bounce, to like 2106, but also we might just collapse. It's also entirely possible. If we look at daily chart for Russell, it's the same picture. It's just, more granular. So yeah, 2106 looks like a reasonable bounce target, but then I would sell it there. I would short it there, you see. So not exactly a great situation. I mean, unless you're a trader like myself and you don't really, care if it's going up or down, you can make money either way, really. So, I guess one thing that you should think about is that, like, let's say you have 401ks, right? And let's say you have 401ks and you got my alert right there to avoid. And this alert was sent on January 18th to my subscribers. And avoid to me means exit. So I would close everything I had, for example, small caps. Same thing for Dow Jones. Basically we're avoid on 7th of March right there, and same goes for NASDAQ, we're avoid right there on 7th of March. So this means exit, run away. So if you had like 401k retirement accounts, I would be out. I would be say, okay, no more. I don't want to play on the upside. I want to just do nothing, because it's very difficult to sell short in the retirement accounts. So the best next thing is to go to cash. So when I say avoid, that means I'm going to cash. Now, again, a bounce is possible, but this bounce might be an opportunity to get out. And to me, that's what it looks like. Looking at junk debt, I mean, things just unraveled completely. So once again, this thing, as early as November of last year, I was already panicking here. We had a false signal right there to the upside in December, but then again, we had a new signal to the downside right there on 18th of January. This thing basically avoided this point. So if you took my advice or idea right 18th of January, then at least you would not have lost another, almost 6%. Some people have retirement accounts, junk debt in their retirement accounts, and not losing is better. It's gaining money. Saving money is better than, what I'm saying. It's better to at least save money, even though you take a small loss here. Maybe you had a small loss here on 18th of January, but if you didn't exit, you now have a huge loss. That's what I'm trying to explain. So what I'm thinking is there's a good chance small caps will do the same thing, and Dow Jones and the NASDAQ. Now I'm saying, okay, yes, we might have a small loss, but what if it collapses? What if S&P goes to, as I'm thinking, it might go to 3,500 easily. So 3,500, and I'll explain why I think that in a second, but that's 3,500 right there. That's another 16%. You see? So it's better to get out, and, it's better to be on the outside looking in than on the inside wishing you were out. So heed my idea. Treasuries. So treasuries actually are in a bear market. We are selling them short, so you can kind of see downward facing arrows right there. There was one alert on the 18th of January, another on the 3rd of February. Probably should have sold it short right there on the 1st of March. It was a good opportunity. Now we're at new lows. So once again, bear market for the treasury bonds as well. And this is long-dated treasury bonds. I mean, the short-dated ones, SHY, for example, look at this. This is short-term. So you see where the bear market started? Okay, actually, this is kind of interesting. I haven't looked at it on weekly chart. So let's look at SHY. This is short-term treasury bonds. Okay. There. The bear market started on 29th of March of last year, literally a year ago. And let's say you got out, you had a tiny little loss, maybe even not really a loss. But let's say you bought it right there on 22nd of February, and you're like, okay, that's it, I'm out of this. And look how much you would have lost if you didn't take my idea. You see how much you would lost? That's a huge loss for short-term bonds, 2.5%. You see. So again, if there is a bear market, it's better to just be out, completely out. Okay, so let's look at next. I wanted to show the market breadth. So we're looking right now at advanced decline volume for New York Stock Exchange Composite, my favorite market breadth indicator. You can go to StockCharts.com, click on Chart School, and look up how is advanced decline line calculated. And there's the advanced decline line. You can know how it's calculated. But briefly, when stocks go up, when a stock goes up, it has a volume. In this case, it's a volume. So if a stock goes up, we're going to assign a positive value for this volume. If your stock goes down, we're going to assign it negative value. At the end of the day, a certain number of stocks go up, certain number of stocks go down. We will take the number of advances and subtract from it number of declines, or amount of volume that was advancing and amount of volume that was declining. We will get a number. Now, currently, you can see it says cumulative. If I was to change it to candlesticks, it will be just a raw number. How many stocks increased and how many stocks decreased. And it actually is a useless number. So what we do is we take it a step further and we make it into cumulative. In other words, we will take that number, what I just said, and we will add it to yesterday's number. In this case, it's a weekly number. So this number will actually be on a Friday's closing basis. So notice what's happening here. This line actually dropped to the level not seen since November 2020. If we extrapolate this thinking, we can look at where S&P 500 was during that same time period. And that is where 3,500 number, this is where I got it from. So this is why I was saying back here that it's entirely possible that we will continue down to 3,500. We're currently at 4,201. 3,500 is another 16% down. And this is just like a reasonable, downside target. We could go lower, or we could, turn around and continue higher. But all indicators are pointing to the downside right now. Things are just not looking good. And again, this is market breadth. In other words, how many stocks are advancing, how many stocks are carrying the stock market higher, and it doesn't seem like there's a lot. But there are some securities that go up and you can actually trade them. So here's, for example, oil. Let's look at the weekly chart of oil. It looks a little more clear. So again, weekly chart of oil, we're changing our indicators to 52 from the daily. So we're looking at each candlestick, each one of those red or green bars is a week, 1 week's worth of activity. So if you had my indicators back on December, week of December 6th, all you need to do is that. You did not need to know anything about geopolitical situation, possible future invasion of Ukraine by Russia, or anything of that nature. You just needed to know where the price was. And so the price was exactly where we wanted. We wanted the price to come down towards the blue support resistance line. You can see it on this chart. And then we wanted it to close above it. And this is exactly what happened on the week of 6th of December. I didn't know anything at that point, but all we needed to know is, did the price do it? And yes, it did it exactly. Does it happen all the time that, such beautiful moves happen? No. But it does happen quite often. And that's an 81% move. So yes, if you had, bought options on USO, for example, that's a nice move. Okay. 81% move. If you couldn't trade futures, I prefer to trade the actual underlying, and it's not a cheap thing. You have to have a large account to trade futures. However, you could trade stocks. So in this case, here's an example of an actual trade that was sent to my subscribers. This is Chevron. Again, it's pretty obvious, right? I don't have to explain it to you. You just look at the picture. If you have eyes, you can figure this out. We have a stock that was already above the blue line. It actually broke out above the blue line right there, so we can kind of even zoom out a little bit more. It broke out above this blue support resistance line, actually went earlier right there on the 11th of January, or the week of 11th of January. I didn't need to know anything about earnings. I didn't need to know about the management of Chevron. I didn't need to know about geopolitical situation. All I need to know is, did this happen? Yes, it happened. Then later on, we had 3 opportunities. Notice how it bounced and it's landed again right on this blue line, and we just bought it right there. We kept buying it. That is a 73% gain. So very much possible you could have bought options right there, leap options. In September of 2021, you could have bought year out options till September of 2022 at a reasonable price. And a move like this, 74% move for a stock, usually translates into at least 3 times move for an option. So we're looking at close to 300% move for the option if you bought it. So congratulations. Again, notice I didn't say anything about earnings. I didn't know anything about where the oil is going to go. All I needed to know is what the price was doing. The price was doing exactly the right thing. All right, let's move on to Forex. This is dollar DXY. Dollar index, pretty obvious. Again, I like this inflection point, so I just absolutely love this type of trades. And this stock was going down. In this case, this is dollar index. It was going down, down, down. All of a sudden, it just did that. On the week of 19th of July, it broke above this blue support resistance line. Again, I didn't know anything about anything. I just bought it there, and that's all we needed to know. Okay. So right now, dollar is at new 52-week highs. At the same time, gold is also at 52-week highs. In fact, it's approaching new records. All-time records. And it's unusual for dollar and gold to move up in the same time. Again, because XAU divided by USD. This is gold divided by US dollar. In other words, gold is expressed in US dollars. So if US dollar, I just showed you, is getting more expensive, then gold divided by US dollar should be getting cheaper, because the lower part of this equation should be pulling this lower, but it's not happening. In fact, right now gold is actually gaining together with dollar. This is unusual, but not like never happens. We are trading it. Yes, we're long gold. We're long gold miners, and I already showed you we have a ton of gold miners that we're trading. B2 Gold. I'm actually long Newmont myself. I'm gonna show it to you. Here's Newmont, and I'm gonna show it in the daily chart. I bought it right there. I didn't think of anything. I didn't know anything about Newmont. I don't know anything about their earnings, but I bought it right there on February 25th at 68.03. It's already up nicely, close to 20%. I took some profits already, but I'm still keeping most of the position. So we are indeed positive on gold. Look, this is a weekly chart. This looks kind of like a shooting star. So definitely possible we're going to pull back. A nice level to watch would be 1923. So this is a blue line. I'm reading it right off the chart. It's possible we're going to pull back towards that level. 1923 right there. Again, just reading it right off the chart. It's quite possible we're going to pull back, but overall the direction is up unequivocally right now. So for whatever reason, clearly, Ukraine war is not helping gold. In fact, is indeed helping gold, and we might pull back, but I think direction again is up. So let's watch for pullback, but then most likely another record. Let's looking at, this is a monthly chart. I'm going to turn off the indicators because they're not really useful here. This is just purely kind of like a, I don't know, cup formation. So we're actually already touched it. This is high is 2070. Did we make? We almost made a new high because previous high was 2075. Very close. A breakout like this could easily see the depth of this pattern is 26%. So we're looking at that much to the upside still. So easily like 2600 for gold when or if this completes. So yeah, gold is definitely an uptrend, but the pullback is quite likely. So I'll be watching 1923 levels. Finally, Bitcoin. So Bitcoin, you know, despite all the hype, despite all the quite nonsensical stuff that people say about it being the, you know, currency of the future and all that, is in a bear market. Okay, we've been shorting it. We've been selling it short. Definitely we're not buying it. So the bear market started when? Right there. You see, before this, it was in a bull market and we were buying it. So the latest, before that in October, we were actually buying it. But then I just didn't like this action here and noticed this big drop in December, on December 4th, and then an outright breakdown. We started shorting, and this is the third time we're selling it short. All of the other cryptos are doing the same thing. So a critical level for Bitcoin is, I'm going to look at weekly, it's a little bit more obvious. There it is, 35533, this yellow line right there. Well, 35951, you know, about that level. So we're looking at somewhere between 359 to 355. So I think if we break below that, I don't know, 10,000 would be reasonable to expect. Yeah, quite reasonable. All right, that's it for this week's recap. Head over to MasterChartsTrading.com, click on products and sign up for my indicators. So again, the indicators are quite useful. You don't need to have, all you need to do is to have a TradingView account, and TradingView.com accounts are free. You do need to sign up on my site and I will open the door for you on TradingView.com. It's super easy. If you have any questions, click on help and click contact and I will explain everything. It's literally very simple. If you trade on your own and you don't really need the indicators, get the newsletter. So newsletter is, you know, $40, and I send out daily alerts on various stocks that we trade. Also, I send out weekly newsletter or rather new videos on the stocks that we trade. So these are going to be this week's topics. Lots of gold miners again. If you want both of them, I think it's a great deal, $59.95. So you'll save like $10 or so if you get them together. If you have any questions, again, let me know by contacting me right there at MasterChartsTrading.com. If you have any questions, ask me. And thanks for watching and have another great trading week. Bye-bye.